Ni hao ma. Morning, everybody. Welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose, and never risk money you cannot afford to lose, and never risk money you cannot afford to lose. Hello. Nice to meet you. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. Who? TradersWay. So you can visit TradersWay.com, open up a demo account, takes less than 1 minute. Obviously, opening a live account takes a little bit longer. You need to do compliance work, but generally very painless. But what do you get for all of that? Well, first of all, you get this webinar every single day, Monday through Friday, to help you learn technical analysis, fundamental analysis, trader psychology, and advanced things. If you want to learn something super advanced, ask a question. You are the boss. I am your humble servant. You also get to enjoy very competitive spreads or fees, depending if you choose a fixed account, a fixed spread account, a variable spread account, or an ECN. But you also get fast execution speed and world-class customer service. Because we love you, you're our sweet baby. So join the family. Cool. So by the way, the things we talked about yesterday, super progress made yesterday on your behalf. So that's good, right? Alrighty then, let's start with, what am I looking at? Yeah, let's do this one. This is the USD scan. USD scan. This is Pig Dog, and I missed it. I missed it. We so helpless against the time. Boo, 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 boo. Shoot, you see it? Okay. Johnny Boy says, ranging? Well, I wouldn't call that a range quite yet. I know you're looking at smaller time frames than an hour, so on a 15-minute chart, you'll say, well, this big drop and the big retracement. And by the way, I hope it was helpful, our conversation yesterday where I said, hey, just, don't bet against what's happened, but also be very aware of what's happening at the market open. Right? Remember I said, even though the day before the stock market was down 1,100 points, don't be shocked if it's up 800. But I wouldn't bet on it either. So Bear says shorted at 140 and got knocked out at break even, which is cool because what that means is you had the opportunity and you removed the risk. So you had a free opportunity. You had a free basket. So it's worth the shot. Right? So eventually you'll catch one, right? So this is euro dollar. I can see that I have a short at this price. La di da di da di da di da da da. I'm short. I shorted. Cool. That's not so bad. I've seen worse, right? I've certainly done worse than that. So I'm going to take the opportunity, move my stop to break even. Bada bing, bada boom. Huh, not bad. So I shorted, I can't even see that anymore. What is it? 20, 23, 29, 24. So I shorted at 24 and it's at 23.50. So 50 pips. Where are the pivots? Why, you need pivots? And stop chasing every breaking wave. All right, this one, as I said, I've done worse, right? Well, there you go. There's some worse. Got plenty of worse for you. So I'm down here with a couple of dog with fleas. One was at break even, one is just above break even. Certainly have an opportunity to move a little closer. So I need some luck on the short run here. Did you go? Yeah, I don't like this move here. Looks like I sold that. Shoot. All right, so I'm going to have to keep my eyes on the Aussie dollar. Missed one, got one, lost one. Well, I don't know. That's not really a lost one, but what else is going on here? USD Swiss franc. Of course, I didn't pull the trigger on this one, and this one's looking beautiful. Up, 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 up. Right, look at this. Up, 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 down, down. But not quite certain yet. But that created the inverse head and shoulders. Up, 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 down, down, buy. Up, 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 down, down, buy. And of course, this is the one I didn't trade. Right, you notice the other ones I'm buying dollar. So this one I could have bought dollar in, but I didn't. And that one was the one that moved. Turkish lira, I don't want to buy this one. I'm only a seller. Could have sold it though, huh? This could be interesting. We'll see if that plays out. Right? Did I say Turkish lira? Wow, my eyes are really shot, huh? USD yen. So no wonder. Still, I could buy this. It's not something I actually want. It's funny. I totally thought that was Turkish lira. No, Japanese yen. We should make an MT4 for visually impaired, huh? And then the last on this end of the denominator, all right, because USD is the numerator here. So the last on the numerator side, up, 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 down. I have a USD CAD move, bought it right at the top like a monkey head. So I'm certainly capable of less than greatness at periods. So we'll see what happens in here. Seems like the stop is in a logical place. If it collapses, right? If it collapses below this, that's not good. So I need it to rise. So I'll leave the stop there, but I might manually get out. I'm kind of like eyeballing this area now as the new level support. So, I mean, I could, if that matters to somebody, move it a little closer. So I kind of need some ups on this one. Yeah, Johnny's like, yeah, you time for some CAD strength. Well, that would be bad for me. So whatever. I think I got what I deserved there. You can see I bet on dollar strength, and well, I got it on one. I got it on two currency pairs that I didn't trade, and then the other two that I did trade, it didn't work out. Oops, what happened there? Where'd my? Can I just click that? What? My mousey went crazy. Kenny, I don't know if I would consider that bullish or not. So you're going to have to interpret that. So what you've seen over the past few years is that lower or slower adjustment of interest rates, or the slower normalization of interest rates has been good for the stock market. But that doesn't necessarily mean it's bullish for currencies. Okay. So when you're a non-reserve currency and your interest rates are going up relative to market rates, the global rates, right? Then generally that can be bullish. So when they're not raising interest rates, and the Fed is, I mean, so now you would argue, well, isn't that what's going on with the euro? Yeah, but Europe is not Australia, right? There's what, 500 million people in Europe and 25 million in Australia. So a lot more money is actually flowing to Europe. Now, when commodities truly take off, then you'll see the Aussie dollar really get strong. So, Kenny, I think one of the things you should watch the most when it comes to the Aussie dollar, besides their monetary policy, you should also watch China. It's really demand side, right? Demand side for commodities from China. So Chinese industrial production, Chinese inflation, Chinese GDP, Chinese retail sales, that kind of stuff. Watch the Baltic Dry Index. It's not a direct indicator, but it's helpful. All these types of things. Oh, and yeah. And how was the dairy auction yesterday? Did anyone catch it? Yeah, Josie, absolutely. Chinese figures are news events for Aussie. That's how you trade them. Yeah, that is good, huh? So that should benefit our friend the Kiwi. Yeah, Brooke makes a good point that the trend is important. So this is a buy zone if you're a bull. Every gambling news that the sea is a friend made enemy. Every gambler knows that to lose is what we're really here for. And every dog on the street knows we're in love with defeat. I guess we could just do it the other way, do it the old-fashioned lazy way. There's Dodger blue, street blue, sea green. There's a Dodger blue in here, isn't there? Cadet blue. Good enough. So you see the sensitivity is a little off. So you can go indicator list, zigzag, and like that. Aha! What? No wonder. Come on. 8. Number lock. 8. There we go. That'll help. That didn't do jack. Ah. That was even worse. What did I do? It deleted it. Get the heck, what the? Clearly I don't use zigzag very often. All right, well then if you want to be a big number, we can make it a big number. See, that's worse. I wonder why I did that. Well, if we do it this way, then at least you get to see the macro time frame. So I'll just make it fatter for you to see it. I'll change the color again. You see? It's trying to point out the macro moves. So I'm ahead of the curve here because I'm marking that and I'm predicting that. Okay. So what I'd like to see now is this. So so we call it a high or low. We have M2 long. We have, I can't quite see that, weekly M2, both of which are buy zones after a bounce at M1, right? So up, down, up maybe. Plus Bonterra, Dairy. Maybe, right? If you're a bull, that's what would go in your trade plan. Your stop could go just below this, just below this, or just below this. Your call depends on how long you want to be exposed to this market and how far, obviously, you think it'll go. But you could say done for the week, right? So let's get rid of that fib objects. Okay. And when you hit your target early in the week, so if you were a bear on this pair on Monday, your target was here. So what happens if you hit it on a Monday or a Tuesday morning? What's the predicted move from there? What's in Wayne's book? WWWD. What would Wayne do? Yeah, it says it'll come back to here. It's a pretty nice thing to know, isn't it? That if you shorted here, your target's here, and if you hit this target quickly, then it's going to go here. Well, that was pretty reasonable, right? So if this collapses now down, we'll probably look forward to something like that. Okay, so pay attention. It's not looking lovely at the moment. Nurse it if that's what you're interested in. So let's go back to scanning the news. In every town of the street. Interesting, right? And I know it might be a coincidence, but we hit the target for the week and it's just kind of stopped and triple bottomed. Not very precisely, though. What was I going to do? Oh, yeah. Seems to me this might be a monthly play, huh? Which means if we can get below this, a break below 62.45 indicates a move towards 59. $58. Well, we'll say 59. Okay. But I think we've already talked about that. I think I had two lines here when we did this part. I think we had one here and then one like way down here. But it's all, you can see it's all here. It's all done. All you had to do is be a bear. That's the hardest part, is making your decision if you're a bull or a bear. Once you've done that, right? Yeah, so anyways, I'm going to set it up for the people that want to build a track record of success and have 2 or 3 years of experience being a portfolio manager in a hedge fund. I'm setting that up for you. We should be able to start March 1st. But you should be serious about it. Well, there'll be some rules. Yeah, guy. Oh, sorry, Guy. Yeah. Now the cool thing is, remember you'll need to fund a live account. I think we said a minimum of $5,000. But here's the cool thing: TradersWay will double that account for you. So if you put in 5, you'll start with a $10,000 trading account, and then we'll right. So then you'll just trade that ultra conservatively under my guidance for the next 2 or 3 years. There'll be a monthly fee, of course, and a couple of times a year I'll get together with you personally one-on-one and review your performance and give you suggestions and feedback. It'll be less than $1,000, John, but more than $1. So it comes down to how much time I'm going to be able to dedicate to meeting with you one-on-one a couple of times a year. That's a lot of time. So we'll see how much I can dedicate. But my goal is that at the end of it, not only will you be a better trader, but you'll have experience that you can take to a hedge fund or a bank and say, well, I was a portfolio manager and I traded the Swiss franc. In fact, I oversaw the Swiss franc ultra short fund. We traded it for 3 years through all these different cycles and through the changes at the S&B and through the changing of risk off to risk on kind of universe as macroeconomics improve. And over this period of 3 years, this is what I actually delivered to the to the team. And you just like, here it is. I'm qualified and experienced. Yeah, I don't. So it depends. I need to decide how much time I can dedicate. Okay. So anyways, dollar seems to be gaining a tiny little bit of strength. Yeah, Barry, you could ask him to do that, but yeah, you wouldn't qualify for this program. Did I mention there would be a live session at the London Open and the New York Open every day? No, John, no, you're not allowed to withdraw this money. No, the goal is to trade for 2 or 3 years consistently and profitably, slowly, conservatively, all that kind of stuff. Okay. Yeah, Chuck, I don't think that would be a problem. No, because it would be such a little amount of money. That money's not the point. If you need to make money, then you're just not ready. Because I only want you to make 2 or 3% a month on your silly $10,000 account. I just want you trading real money with a real focus and a real manager and gaining real experiences that will make you marketable to a potential client or to a potential job interview. But if you need to make $200 or $300 just to afford the program, you're not ready. So all right, so whatever, too much already. Looking at the exotics, I don't want any of these exotics while the dollar's strong, and that's that. Gee whiz, I missed this one. I guess, I don't even want to see it in market conditions like this. But, that being a top so early in the week, it does predict a move back down to the central. And look, it did it to the pip. Maybe not this one, almost to the pip. But this one, it was exactly to the pip. But, I don't even want to see it. I don't even want to see that. Toomey asks a really tough question. Should South Africa move away from an economic system of capitalism? Capitalism is not perfect by any means, but generally what makes things worse is the government's good intentions. So you have the free market. If the free market was a free market, because it's not actually a free market, the free market was a free market, the consequence of it are these booms and busts. Okay? Things like the real estate market going up and up and up and then collapse, and the stock market going up and up and up and then collapse. Okay? So then the government gets involved and says, well, we should have some regulation to make sure there's no lying and cheating and all that kind of stuff. And then these people are too rich and these people are too poor, so why don't we take some money and put it over there and all this kind of stuff. And the more it does it, the more that it's not a free market. The government says, well, this market keeps collapsing and millions of people lose their jobs, so we should probably, get in there and try to prevent the market from collapsing. But that screws the market up. Okay? So the closer you are to a free market, the more there's going to be long-term volatility. But there's also much better potential for this system to work, because we can look at the opposite of that, and that's moving to systems that are closer to socialism. And there's no example of that working, because it's actually against human nature. Now, I think it's right to say, well, workers or labor should not be taking advantage of the ultra rich and that kind of stuff. Those who own capital and that shouldn't own everything, and all these workers act like slaves. It's sort of like a serf and landlord system. We don't want that. But when you take it too far, it just doesn't work. People are worse off. So now South Africa, well, I don't know if I'm qualified to speak for the people of South Africa. How about this? I know I'm not qualified to speak for the people of South Africa and run the government and all that kind of stuff. But what's been happening isn't working, it seems to me. A lot of it is corruption, which, if you could just get rid of corruption, that would be a first good step, right? But then, like, look at how big the country is, the population. It's wonderful. Um, there are lots of young workers that work at reasonable wages, especially compared to like Norway, where a young person has to earn $1 million a year to pay rent and buy his Tesla. So that makes South Africa competitive. It's got lots of natural resources. Um, so, I mean, South Africa, you would think, would be in an economic boom. So the question is, why not? And probably the government retards, it's actually a word, right? The retardation. The government retards the actual economy. Is my guess. And if you let capitalism work, not all the problems are going to be solved, but capitalism, you can't have corruption. Capitalism, you can't have an overbearing government. Capitalism needs free market. And if prices get too expensive, people stop buying, then prices come down. If wages get too high, then prices have to go up. If prices go up, people stop buying, so prices come down, wages come down. Right? It's just a natural thing. So you're going to have to be okay with the market resetting itself and the equilibrium finding its place. And some of these mechanisms are a little slow. But if you have minimum wage, for example, and prices have to come down, but minimum wage won't allow it, then it retards the market, and all of a sudden you can have a really big disconnect between what the free market actually wants and what the manipulated market can deliver, and that could actually create shortages of product because no one wants to build something that's too expensive. You can't even sell it for a profit. You could build it and sell it for a loss. Well, nobody wants to do that, right? And therefore, then you're going to have a surplus of workers because now that factory has to shut down, and all the workers are sitting around like, well, the factory shut down. Now what do I do? And then then it goes on and on and on and on. So again, I don't know about South Africa, but my opinion is that any form of socialism has not worked. Canada's got a tinge of it. Norway and Sweden, there's tinges of it, but these are very small economies, right? Australia maybe has got some socialism to it. Just the idea like healthcare for everybody. Oh, and 50% taxes, right? Like that's Canada, right? And you're like, well, okay, that might work okay for an economy of 25 or 30 million people, but 300 million, it don't work, right? So, right? You might want to like check out China and see what you like about their capitalist system. Because remember, they were socialists. They were communist socialists. And it failed. Now they're communist capitalists, and they're probably much better off. So look at the model, right? Look at China 25 years ago and China now. And try to find other examples where GDP has gone up 1,000%. And wages have gone up 1,000% in 25 years, right? And then you're like, oh, well, Taiwan's another example. South Korea's another example. Japan's another example. Well, right? The Asian tigers, right? Singapore's another example, right? And then you're like, oh my goodness, those are all economies that turn capitalist, right? But they're capitalist. Now there's different tinges of it. So the question was, should South Africa get rid of capitalism? Why? Because things are so bad? No, probably because it's more socialist than it is capitalist. So if anything, it needs to become more capitalist. Okay. So dare I get into this, I don't know what you call it. When I was there, I learned about what the empowerment. I know this is a touchy thing, but as a, I don't know how that would work. It seems to me when you manipulate a market that much, the market tends to fail no matter how good your intentions are. So, oh, it's raining outside like crazy. Holy smokes. So I tend to lean towards free markets with smaller governments, not like no government. I like smaller governments. I want the roads to be nice, the bridges to be nice. I want the schools to be nice. I want the hospitals to be nice. In America, we don't have anything like that that's nice. It's amazing. Yeah, well, we don't need to go too political on that. It was just as a free market, a believer in the free markets. Now, I don't want like total free markets where you have people cheating and lying and there's no rules at all and all this kind of stuff. No. I'm not suggesting that. But I think government should have best intentions in mind, and I think generally they usually do. But it often backfires. And then if you think the government's corrupt, Northern Europe, well, then you get the situation where you have people in their jobs forever because they can't get fired, and 9 months of vacation and 3 months of striking. Why? Because if you work for me and you suck, you just one day you're like, I'm going to start sucking at work. Oh, I got problems at home. Oh, my wife's drinking too much. Great, you're fired. Not my problem. Produce. You work here, come to work smiling, and make money. Right, James. So therefore, that's why you need some government and you need some planning. I really like the Chinese way where they say, here's our 5-year plan. And we are actually going to work on it. And then when the 5 years is over, we're going to look at the plan and see how we're doing. I love that. Yeah, well, okay, so that's Northern Europe. I guess I'm probably thinking more like Spain, right? So just remember, so I wrote a paper on the perfect system, and the key to the whole thing is, I mean, there was some government, there were transfer payments where the rich did pay taxes, and some of that money did go to the lower 75% of the economy, but it went to things like ensuring that society and the culture of society and the system of government created and enhanced and promoted entrepreneurialism. So it wasn't the government's job to say you should have a job. It was the government's job to say, if you know a way to make money, you should be able to do it. So if you want to drive an Uber, boom, drive an Uber. I love that whole idea. I love it. Right? But the government's coming in like, no, you have to be a taxi driver. You have to fill out these forms and have these licenses and pay all this money. Like in New York City, wasn't it like $2 million to get a medallion for your taxi? No, I like things like Uber, like I need a cab right now. Boom, give me a cab. When I'm in the cab, we're off we go. I know the car, I know the license plate, I know the driver, I have the driver's history. I don't have to pay cash. I love it, boom. But what if the whole economy was such like that, right? But that's what I'm moving to, or that's what I suggested. Like, an economy where it creates entrepreneurs, it supports entrepreneurs, it creates infrastructure for entrepreneurialism. But it doesn't dictate like that you have to have a job or prices or anything like that. And if you don't have a job, and the whole rest of the economy does have a job because you can work for yourself or build your own company and hire other people. I mean, so anyways. Oh, one of the things it focused on was family. Tell me if you like this idea. One of the things it focused on was the family, and some of those transfer payments went to entrepreneurialism and stuff, but it also paid a spouse to stay home with children during their young, through their school years. So it said, if you're married, so it actually pays you to stay married, and you have children, but not too many children, then one of the spouses that chooses to stay home will actually be compensated for that work, which would then also be calculated in GDP as income. That would be part of the taxes, right? But studies will show you that if I'll just pick on mom. We'll make it a soccer mom, right? So mom stays home. She's smart, college degree, all that, chooses to stay home. Great. Now there's a parent there always guiding and raising the youngest of children and then taking them home. And then which is nurturing is important. And then when they're older, like, second, third, fourth grade, mom's doing homework with them, taking them to practices and taking them to social events and all these different things, but spending time, and it has the ability so that they can eat healthy meals, have a balanced life at home, I think education was part of the requirements, all that kind of stuff. But studies will show, I mean, just look at my example here in Georgia, where my city has lots of stay-at-home moms with tons of time, and they're like tiger moms, I think is what they're called, where they're in everybody's crap, right? They're doing this and doing that, and they're in this meeting, that meeting, and their kids are spending hours and hours and hours a day at doing homework, and then they're in this program and that program and going here and over there. Like my daughter yesterday met the governor of Georgia and one of the senators of Georgia. Okay, so we got like, our kids are in all these different educational programs and all that kind of stuff. But when they go to like the robotics competitions, they go against lower income schools where both parents are working. They don't have time to do a lot of this stuff. They care about their kids, so they're in the robotics program. But when they go up against our kids, we destroy them. Absolutely destroy them. Why? Because our kids had 100 hours of free time, parents driving them around to all these meetings, parents being the coaches, focused and keeping their kids on all of this, right? And the other kids are like, well, my mom and dad both work, and, we only had so much time, and, my dad's not so good at engineering. We did our best. So to me, I'm like, you know what? It's not that the kids aren't any smarter, it's that the parents make more money. Right? That's all it is that's the income equality. That's the gap. If I could work with that other team and get them to the state championship too, because I got the free time, right? Because mom's got the free time, because we encourage them. So all I'm saying is you go all the way back. That was part of my program as well. I actually had to write this, like 20-page paper on the perfect economy. And that was a big part of it. I needed the family unit because then it's the foundation of which all society is built. So, right? So I said that I don't believe in equality, I believe in equal opportunity. There's a difference. And I don't know where I don't know where the government switched from equal opportunity to everyone is equal. No, everybody is different. Everybody is different. Right? Everybody's different. That means that is a good thing. It's not a bad thing to say somebody is different. It's a good thing. I don't understand. Yeah, thank you for the opinion. I don't understand how we flipped on that. When was being different bad? Think about it. How many entrepreneurs are the same? What would the world be like without entrepreneurs? I mean, entrepreneurs are different just by definition. I walk through everything in life and say, that sucks, I could do that better. That sucks, I could do that better. That company, that transaction I just did, that sucked. They just wasted this opportunity. That's what an entrepreneur thinks. Everything, right? They're different. Different is okay. I can't try. Just let me have the opportunity to change things. That's what I think is the most important thing for society, is that entrepreneurial edge. Yeah, well, that's the problem. That's where socialism leads. So we need to retrain the whole world. One, since World War II, the world has been trying this experiment. Unfortunately, it fails. What we don't want is what Karl Marx was worried about, where that 1% now, and we talked about this yesterday, the 1% is so rich and powerful that they basically own monopolies, like what happened in the late 1800s, right? Before, let's say before the Depression. They own monopolies, which is not a free market at all. And then what did they do with that money? They ran the government. Okay, so we don't want that. Okay, we don't want that. But also, you don't want a society of like, save me, save me. Why didn't you save me yet? I've been waiting. Save yourself. But the problem is we don't have a system like that where you can save yourself. So you need a system where you can take care of yourself. And the government needs to make sure at all times you have an equal opportunity to take care of yourself. There's a big difference, right? You need the equal opportunity to take care of yourself, and a system and a culture of taking care of yourself. Free education, I'm not sure if I'm into that. I think we need appropriate education. If I was a billionaire, one of the things I would do is I would open a bunch of trade schools. I teach a lot. I teach people welding, how to be an electrician, how to be a plumber, how to be a carpenter, framer, drywaller, painter. I mean liquid, James. Maybe so, but around here and in Canada, there's a shortage. Prices have doubled in 3-4 years. I asked the roofer, I'm like, hey man, I'm having trouble finding a crew. Do you know anyone? Do you know any framers? And he's like, no, you can't get framers. I'm like, what? He's like, no, You can't get framers, they're too busy. Like, whoa, I can't get a framer? No, no, that's here in Georgia. But like 5 years ago in Canada, if you needed a contractor, forget about it. Forget about it. It's like James like hiring a prostitute. Hey, you frame? Hey, how much to do my basement? Hmm? Why don't you come to my basement? Bring that hammer with you, huh? Show me what you can do. You got skills? I need a frame. Yeah, I need a frame real good. All right, that's so funny, James. So support, boom, 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 pound yen, pound yen. So here's the thing. I mean, I guess you're asking me to counter trend this. Yeah, okay. Um, it's a long ways up. I mean, so you do have a choice. You can buy off this bottom and go with this and go with the general plan of trading it back to the central. Or maybe you get you wait for a break pullback scenario. Yeah, I know you are James, but I don't know. I'd be that guy out there like, hey, you framer? It's like, are you freaking stupid? I'm a plumber. Look at, I'm holding PVC pipe in my hand. Okay. Sorry. Nah, I'm wicked smart. I can figure it out. Oh, 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 oh. Oh, 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 oh. Let's just take a closer look here. Because I feel like it's kind of trying to come together. So I'm making more money on this euro dollar short. I'm almost back to break even on this Aussie dollar short. USD CAD is trying to head up. I'm quite a ways away though, still. Right? So I need oil to fall. Oil is trying to fall. So I'm okay. I'm not in a good position, right? Gold is falling, so dollar should rise, and I'm buying dollar here, I'm buying dollar here, I'm buying dollar here. Um, so I think I'm okay, but I'm not in good shape. Yeah, well, see, then that's the other problem, then James, right? Then that costs too much. Yeah, John S says dollars ranging. Yeah, okay. I mean, I'm. It's one of these things like, well, the range could break out, and the breakout could go in my favor, and I'm not overexposed to anything. Like I'm not dying, so it looks like it could possibly. So now I'm on my break-even line on this Aussie. So it looks like there's a lot of potential for it to break my way. So in a sense, maybe I took the bottom of the range or whatever. James is wealthy enough. Yeah, all right. So how often do you like to overpay for stuff just because you have money in your hand? Yeah, I know it's demand driven. I am a patient person, right? And if you've studied game theory, having patience or time is your number one edge. So I'll wait for either supply of framers to increase. Yeah, yeah, that's what I'm like. I'll just do it next session, not a problem. Yeah, always. And recessions are where rich people make money. I don't know if you figured that out. That's why they say things like cash is king. Yeah, so I'm okay with most of these moves here. I don't want to trade this down though, because I'm buying dollars, so we'll stay away from that. So just, I guess it's a wait and see, right? We need to see how the market's going to open. Yeah, me too, James. And also, trading has taught me about focus, where I can goof around, be happy-go-lucky, and then I'm in the zone. Like just snap the fingers, crack the whip. I can zone in. And I think it's because it's sitting here, and then all of a sudden I'm like, oh, look at that, and then I'll right, I'm over there, and I can see something, and then just process it quickly and zip over and go, wup, up, up, up. Okay, I'm ready. Kill, 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 kill. Yeah, yeah, cool. Yeah, so I'm just kind of going through and just looking at how things have developed. There were some opportunities early in the week, and then we had that big move on the stock market, which we knew was coming. We just didn't know exactly when. So now it's here. Where's the setup? Did we really know that on Monday? You could have gotten extremely lucky on Monday, or extremely unlucky on Monday, depending on your direction. So the next kind of thing is, what happens the rest of the week? Where does it set up for next week? I think Thursday night or Friday is going to be very important for, in particular, swing traders. So I think what I'm going to try to do, I mean, what day is it? Is it already Wednesday? I was thinking of starting that swing trading program um, like Friday, maybe even, so that we can look at next week's pivots on Friday and set things up. No, the hedge fund thing will take more like March 1st. Yeah, they're definitely separate. Yeah, of course, Chuck. No, hedge funds don't hedge that way. Hedge funds help investors hedge their exposure in other markets. Okay, so for example, let's say I own an apartment building in Mexico and I collected rent in peso. I have this exposure to peso. So I could have a fund manager hedge that risk. That's why I would make you guys portfolio managers. So working for my fund as a portfolio manager, you may be in a situation where I say, okay, for the next 3 years, all you do is buy the Mexican peso, and someone else, I'll say, all you do is sell the Mexican peso. So you don't have any choice now. You're the portfolio manager for that strategy. So you wouldn't like buy the peso, then sell the peso, then buy and sell and buy, and go do something else. No, no, no. All you're allowed to do is that one direction on that one currency, and do that for 3 years. But you'll find out you'll become a better trader. It forces you kind of to do the advice I've been giving you all these years. You'll be forced to do it, but you'll have the experience of being a true portfolio manager. So I'm not asking you to hedge. I'm asking you to make money very, very, very conservatively. All right. So anyways, still lots of downward movement on these yens. Still lots of risk off. You can see my old arrow. I used to have one here. Look at this beautiful roll reversal. I mean, down, 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 up, up, sell. So I'm not ready to sell Japanese yen because remember, I'm expecting the Japanese yen to be strong until April, right? Right? Everyone's clear on that? Right. So don't be shocked like 1 or 2 weeks into April, then the yen's kind of rally up again. But remember, rallies or declines look like this. You know, let me do this one. Declines look like this. Okay, there's your rally. Now, as an overall strategy that would be offered to clients one day, we could say, well, we have an expert that looks for buying opportunities on the dollar or whatever it is. And very often these bounces like this occur at things like reversal pivots, right? Now, they're not as profitable, but eventually one of those will reverse the market and the market goes from bearish to bullish. You just don't know which one. When you're long and short, you're always going to be late. Because you're not going to buy this right at the bottom because you're already short. So you're incentivized to like, oh, well, maybe it goes a little farther, right? So you hang on a little bit and you give some back and then you buy it, and now you got almost nothing left because you rode this back up and you actually took profit here, which means maybe you stop and reverse immediately and you go long, and now you only got maybe 50% of that upward move left, but you also gave away some of this profit here. Okay? So the benefit, if you will, of having multiple traders, let's say 25 traders in a firm, each one trading one currency in one direction, is that some guy will buy it at the bottom. Beautiful entry because they've been waiting for hours or days to hit that price, and then they're like, aha, that's my buy. But they also understand it's a downtrend, so their target would be like the central pivot, to get out. And they're still that way here, and they're still that way here, and they're buyers of this, but they understand they're buying in a falling market, so they're conservative and all that kind of stuff. And they eke out a living. But that same trader, once the reversal happens, right? That same trader is now on the winning side and is buying here and is more aggressive, maybe even pyramiding, right? And the other trader now is on the conservative side of the trade, but their entries are better because they're waiting for these areas. These are very predictable resistance areas. Right. So James, I would want you to get rid of that, right? I'd want you to get rid of that. And this may be a situation where you learn that the patience and conservative trading is better. So I'm not even allowing you to take the money back, right? I mean, one day you can have the money back. You would have grown your account, but the purpose isn't to live off this. This is going to Harvard. Harvard doesn't pay me money. It costs me money to go to Harvard, but there's going to be a reward at the end of the tunnel, right? So at the end of the tunnel, you would have grown your account size. There's no doubt about that. You don't get to keep the $5,000 that TradersWay puts in your account, but you can withdraw your cash and you're done with the program, and you have a track record and you're a hell of a trader. Now you got something, right? You're like a Harvard grad. Now you got something. You're worth something in the open market. But now this idea, you're like, oh, I only need to earn 2 or 3, 4% a month. I can let this mini lot run, and 2, 3 days later you come back, you're like, oh, maybe I can trade a second one into that, and you get that in there, and all of a sudden you're trading differently, and that's the whole point. And money's not stressing you out. It's not a lot of money, and you're not allowed to withdraw it anyways. I mean, look, if you lose your $5,000, you're fired anyways. Whatever, right? But if you truly look at it at the long run and really truly trade it like it's not 10,000 but 10 million, I think you'll become a different trader. And the fact that you're only allowed to sell the Swiss franc means you wake up in the morning, you're like, what, are market conditions favorable for selling the Swiss franc? Right? Does it look like this, or does it look like this? And you're like, well, right? I kind of like these conditions, but not at this price. I think I'll wait, and if I can get it down at this other price, right? Like you're here, but you're like, you know what? I think this is going to 50%. I really would like to buy it down here, or maybe see it revert and do a thing here, and then I'll take it. And you're just like, sweating bullets at all. You don't feel like you have to trade all day, every day. Some days you might make 5 trades. Some days you might make no trades. Okay? But the thing is, it's your job. So if I said, get in here right now and tell me about the Swiss franc. What's going on with the franc? You're like, hey, man, let me tell you. Jordan at the SNB said blah, 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 blah. And they're worried about these changes at the ECB and the money flow between, so there seems to be, yeah. And somehow whatever you said sounds intelligent. So now you'd actually become an expert. Whatever currency I gave you, you'd become an absolute world-renowned expert. And you'd be a patient, disciplined trader. You understand? Like, you should come out of this wicked awesome with real experience. Well, your behavior to the market, Kenny, right? Your behavior to the market. You got to get to the point where you're not pushing the market. You just simply look at the market from outside the glass box. What's everybody doing now? What's everybody worried about? Where are the bulls? Where are the bears? Well, I'm a bull, but this is a bearish situation, so I'm just not going to really participate. And I'll wait. Maybe nothing. Maybe I get one or two trades this week, and they're both break-even trades. Well, what can I do? Market conditions are not favorable, and then one day they will be, and then you'll trade a hell of a lot, right? Some months you'll be plus 1%. Some months you'll be plus 6%. But overall, you'll have low volatility and steady returns. And you'll be an expert in a currency. Like, what a marketable skill. Imagine your job interview at a bank or a hedge fund or something. You're like, so, tell us, have you ever traded the Swiss franc? Oh, you just fell into the lion's den. Well, let me tell you about the 6 players on the board of the Swiss National Bank. We have Jordan, we have this, we have that, and we got that guy, and that guy, and wow. And and it's like some guy at the bar talking about, the Philadelphia Eagles, like he's on the team with everybody, right? And he knows all the players and the stats and where they went to college and their girlfriends' names and all this kind of stuff. We're like, whoa. And I'm like, well, why don't you know important things, right? So imagine you knew the Swiss National Bank like some people know the Philadelphia Eagles or right? I don't know. About Manchester United. I don't know. Pick your team. But there are so many people that follow sports to an amazing degree of detail. Or The Bachelor. Or one of the singing shows. Oh, well, I'm rooting for this guy and that girl and him. But those other people, I don't like them. And that one was pitchy. And that one was yelly. And that, like, oh my God. But you don't know anything about finance? Right? So it's your job to know about things like all the decision makers at the Bank of England if you're trading the pound. Okay? So do you want to become a world-renowned expert in a currency? Have 3 years of trading experience as a portfolio manager? And be able to have a track record that showed low volatility and conservative risk-adjusted returns? Well, why don't we do that? So anyways. Right? And probably for the 3 years, it'd be less money than I spend one semester at Harvard. Right? Like I'll go to Harvard for 3 weeks and it's like $15,000 for 3 weeks. Frickazee. Oh, and I have to do it for 4 years. Just the 3 weeks. I'm like, what the, right? So, you know, $200-300 a month to get that. Gee whiz. So I don't know. So I gotta jump, babe, because it was real. It sucks though. It's dark outside. It's raining. What a crappy day. What am I gonna do? Pay Harvard to come to Atlanta. Yeah. Read. Actually, yeah, I have to read some organizational behavior, and I got to do some macroeconomics, and I got to do some work too. Huh? So, anyways, uh, peace on earth. May the pips be with you. May your profits be above average. So keep your ears open for these things. Cheers.